Welcome back to this another live session, traders. One of the best day to trades. FOMC coming up in few hours. Are you guys ready for this big move to waiting for us to trade the market? As Wednesday FOMC day, the market is pretty volatile. If you guys look at it, you can see the market is in fact very volatile, which is very good to hear that. Coming up later in NY session, I was just looking at the schedule first to prepare ourselves. So coming up, 4 important news on CAD: BUC rate statement, overnight rate, and BUC press conference. So that's with the coming up early in my zone in the morning. We will be trading live FOMC. So federal fund rate, FOMC economics projection, as well as FOMC statement, and followed by 4:30 a.m. FOMC press conference. So this whole event going to live, and big day for dollar, all dollar pairs, gold, dollar CAD, Gbpjpy is coming tomorrow as well. After tomorrow, BOJ policy rate statement. So that's a big trading week, followed by we saw that previous week as well, quite a few pairs was moving. If you look at the past week, we see there is a relationship with the data and with the CPI. The market started to move, and followed by now with FOMC, we could see that today and this session as well as the next session, the market may wildly move, and that's what we expect for the market to remain highly volatile. Are you guys ready for an entry? Even if you are not entering, still okay, because here the main focus is just not to trade, but to learn to trade. So this is what the main goal as a trader with us: not to trade, but learn to trade. Say yes if you are here. Thank you. Good morning. Good morning from UAE. Welcome. Good morning. Thank you. All right. So before I do the full multi-time frame analysis, I'm just waiting for all the members to show up. If you guys are here, say yes in the live chat. Welcome. Okay, very good. So you see, welcome. Thank you. Now, with the market movement that you can see on gold. Now, if you look at this market, we can see that it's a potentially what we can see here. Welcome. Welcome. Thank you. And now let's first of all look at. Now, the first thing, what is our objective in this live session is education, so that you guys can become an independent trader. Our goal in Forex Trading Wizard Academy, every member coming in contact or every viewers, so that they can learn to trade, because trading is more relevant than ever. They can learn and grow as a trader. And so, and also to explain, actually trading is easy, simplest way to make money from the market. Being a trader means you know nothing. You need nothing. Okay, you don't need education, you don't need capital, you need nothing. Just a mindset, a strategy, very short period of time. Okay, so when you become good at trading, you don't need to spend the whole day. You can make a week's of earning within few hours in a day. Okay, that's the beauty of becoming a trader, and the rest of the time you can spend with your friends, family, go wherever you want. It's a freedom. And to gain that freedom, the first step is to give a little bit of time and little investment. Doesn't have to be the capital that you invest, but the time and attention, right? So if you are in that boat, if you think that you are the right fit for that, then this is the right live session for you. Together look at the market. First of all, starting with gold, I see that many members are here already. Thanks for confirming. Let's begin today's analysis. I'm looking at starting with the gold here. Now, first of all, I'm looking at daily chart. Now, looking at daily here, what we can see that this market from the daily perspective, long-term picture, that means that bigger picture is bull market. And starting from here, we can see that an impulse correction. So this is how to look at the market. Thank you. This is how look at the market, is to look at the market from completely fresh perspective. And if we look at the bigger picture here in this market from the long-term direction, that we can see that this is bull market. That means that from the daily, we see the price is trading above 10 EMA. Trading above 10 EMA is absolutely important to look at, because it's a very now fast moving market. So in that market, we can see the previous day form a narrower doji here. And with this narrow doji with a long wick at the top, we can see that the market is slowly coming down to break that low here. And that is where the trading opportunity coming up potentially later. As if you look at this market, we can see that with this movement, the market has made an impulse on the upside here. Now it's on a pullback. So from the daily, it's on a pullback. Now this market now on the lower time frame potentially turning to a bear market, possibly to lower time frame. That means with this move, even we could see now potentially deeper pullback. That pullback could be in this level or any other level. So that's what I'm looking at here, guys, that for potential entry. Now you can see here, this is the 4-hour chart where there is a liquidity gap here, followed by narrow doji, followed by liquidity gap here, bearish engulfer, followed by narrow doji. Now we can see that this is in that zone here. It is forming bearish. We see that there is a fair value gap here. So it could happen that the market coming here for a retest of this level where the previous resistance, which is turning support here. Now if we look at that level, if you guys look at it, you can see this is a previous resistance line here. And in this area, if you look at, this is the resistance here, support here. And what we can see from this level, a big drop, pullback, a big drop, pullback. So the market has broken to the upside, but this resistance that in the past was respected has not been properly tested as a support. So therefore, from the daily, we could see that potentially to break that low as the market also approaching that 20 EMA. So locally, currently, as the market has broken this support here, okay, we could see that the market potentially remaining bearish. Now some of the trade that we have opened exactly in the same pattern we will be discussing here in this live session as well. So make sure guys you stick till the end to know everything, to learn everything. Now the current session that we can see, the market is here. Okay, now the session's high. Now in that situation, because we need to know the major direction of the trend based on the time frame, is only to understand the directional bias, right? Because we need to decide either we will be following the session's low or session's high if we know the direction. So that's why I always emphasize on understanding the direction of the trend. So what do you see here is that this is the previous resistance line. Now as the market is, if you guys look at it, you can see it's sharply falling market, and lower time frame price action showing that is significantly bearish. So for us to find sell entry, where am I looking at? If you look at here, you can see the previous session, previous 4 hour form a big narrow red doji. Now this doji, we can see the market already these sessions has dropped to this here so far, almost 95 to 90, almost nearly to 100 pip drop this session. Now we might see that further drop. At the same time, to look for an entry, this is where I'm looking at the moment for the market to potentially break from this structure. You can see the 15 minutes, there is a bearish engulfer here on the 15 minutes. This bearish engulfer is a key level, right? So breaking above is where we might see further drop here, but we don't want to enter at this point, because anytime you could see the market is again pushing up for a pullback. But the session's high with this current candle, as there's a fair value gap, is where we are looking at for potential entry in this market. So is the market coming to retest that session's high? Right, that's the question. Above this level, we want to see the market is moving with one single aggressive move back to the upside with this liquidity gap, and then trending back down. If you look at 30 minutes, we can see that it's forming potentially a bearish engulfer. And here is the doji. The market is maintaining that series of lower high with multiple liquidity grabs. So this is a typical bear market. Understanding trend is halfway. That if you want to be a better trader, understanding trend is the halfway through that. Okay, so because once you know the trend, once you understand the direction of the trend, it's become much more easier to make trading decision based on the trend. And now in this area, that what we can see, the price is slowly building that momentum for this possible downside. Our level here, so what we are looking at in that area, we want to see the market has tested that level with us in a specific way that we are looking at for entry, because 4 hour chart is where you can see this is a bearish engulfer liquidity grab, drop, and doji, and you can see the market is now started to break that low here. The zone here that you can see at the moment the price is, we can't neither be sell nor be buy, because if we seller we too late, if you're buyer we are also too late, right? Because we want to see the market has feel that fair value gap. If you're not sure fair value gap, you can let me know in the live chat. We can discuss in this live session in detail about fair value gap, how it works. So you will be looking at the market structure, the price action on the 15-minute chart for potential move, that how the market might be doing in that area. This is a very nice looking bearish engulfer on the 15 minutes, and it might completely push that price down here. And as this is a big fair value gap, it is not that impossible to see the market even today coming to 3626 level as FOMC. Do you think that's gonna be big drop, or it's coming for a pullback? What level you are expecting gold to drop? I'm posting a poll here, okay, asking to see what you guys are thinking. Do you think that gold is going to drop to 3626 level? That means below this low here at this 10 EM with the FOMC, or it's gonna bounce off before coming to that level from this zone. So So I posted a poll. Let's see what most members are thinking. So what do you think, that is gold coming to this support at 3626, or before coming here it's gonna having a bounce off? Which time frame do you prefer to identify the fair value gap? Daily, 4 hour? Okay, that's a okay. So to understand the fair value, let's first understand the total mechanism of the market, so that why do we need to consider the fair value gap also, you know that. And then we will be looking at the time frame. Now to navigate the market, let's say in relation to the price and the market structure, where the market is, right? If I give you an analogy, let's say you are in a new city, okay, a completely new place, new territory. Now if you don't know anything, the first thing, what do you see? You look at the map. Where am I in relation to the city, right? That's how we identify the zone. And then you see that, okay, I'm here, I need to go there, this is the route, like that, right? So that's how to understand that a new territory. So the market also has a map, and the price follows specific routes pattern to go from one place to the other. So the map of the market is, if you understand, then it will be much easier for you to understand that where the price is in relation to the market. So let's very simply as to you can understand it. First of all, how the market moves. Okay, the market moves in a specific way. So there will be, imagine that a downtrending market like this one, there will be a move, that means selling pressure, and then pull back. There will be another move, creating a new lower low, which is an ideal market structure. Pull back to the previous support and resistance or even higher, and then the market will create another new lower low, and it's gonna move in that way. But at some point you'll see that this market will never remain like that, right? There will be always some changes coming in the market. So now when it needs to change the direction of the trend, this is the paradox. So when you see the direction of the trend, you'll see the market will never straight away and changing like that, not going like that. Okay, the market will do something. So that's where understanding, either it will range like that or one way, but it's gonna break strongly below and then straight going back up to break that swing high, drop down to form an inverted head and shoulder, and then to trend again, right? Or it's gonna create a double bottom. That means instead of creating a new lower low, it's gonna create a double bottom and then break the swing high, which is strongly neckline retest, and then change the trend. So that's how this is the fundamental trajectory of the market movement that you see over and over again. Now when you see that the market is moving in that way, why does this happen, right? This is also very important, because the market is moved by the smart money, the institutional trader who are putting bigger volume in the market. So when the market range is basically there is not enough volume for the institutional trader to drop this price further, so the market moves in a sideways to gather liquidity, and then at some point you see the market will break out. That means there is a huge buying pressure, which is change of trend, still not confirmed yet, until you see that there will be, because there is a huge volume come, and that means whenever there is a buying, right? So it's the smart money trade in that way. We trade like, by lot size, they trade by volume, so they need also liquidity, right? So for example, this is the price, and if the institutional want to buy 100 million, okay, they may not be able to fill all those order, because as soon as they place the order, the price goes up. It's not good enough for them to place more orders. So the price goes up. Let's say they want to buy 100 million as an example. Now they bought 10 million, and then the market has gone up here. Now profit taking. Now this profit taking is where there's a pullback, right? And this is the previous supply area. Okay, now turn to demand area. The market is, in many cases, you see testing this supply area as demand area, and then before you see the market will leave little bit of gap here, which is called an FVG, or the imbalance. It's gonna, you see that over and over again. So the market, once the pullback happen, another volume come, the market is gonna pull back, profit taking. That's the ideal way the market moves, which is the fundamental trajectory of the market. Now at some point you see that we wait for a break of structure. That's where the liquidity grab, that's where the market purge or the refresh itself for another move, because when the market goes too high again, it's not worth for the institutional trader to buy again. So they close their some position, or new order, sell order come, and then the market breaks from the structure. When the market breaks from the structure, who are trailing those their trade, because how the institutional trader trade, they take a big profit target. Okay, and that most of the time you see that they trail, that they don't close it immediately, they trail those, they move their stop loss to the previous swing low, and when the market breaks from the structure, a lot of stop loss hit, or the volume trigger. So because when the buyers are buying, their stop loss is a sell order. So when the market breaks from the structure, those sell order trigger. So when the sell order trigger, because the market has either buyer or seller, so if someone is selling here, that means here stop loss is a sell order, and then another buy happen by the and the market refresh new trend, bounce back to the upside. At some point also you'll see that, and the market boom drop. And more often you'll see that when the market reject from those high, it drop like that, because all those imbalances filled and the market filled that fair value gap, straight drop to this key support level, right? So that's where this is a fair value gap again, and that is the zone that we, if you look at here, you can see this is how the market moved. This is the mechanics of the market, the fundamental trajectory that you can see the market is moving. By knowing that, you know that exactly at what level the market is in relation to that. So now let's apply this concept or the understanding with the current market structure, how the market is currently doing here. Now if you look at the current market structure, what do you see here? You see, this is, if you consider this 15 minutes market structure, we can see that it's a typical downtrend. There is no sign of reversal here. That means the market has dropped, pull back, another drop. So in this way, this is fair value gap, because there is no, you see, there is no specific zone here to resist that price. Now where is the then potential order block, so which is called the order block, the one where the market started to move new direction, right? So here is the order block. Okay, now this is the, if you look at the daily, you see that this is the daily low here. Okay, and from here we saw this market moves. Now in those situations, you'll see that more often the market breaks here and then bounce. Why? Because when the market structure breaks, then boom, the price, you'll see that straight drop, more often back. This is order block here. This is what the institutional trader bought to make this move from here to there. So this is an order block to this level. Now it is, if the market breaks, now you can see that start to break, it could overextend here, and that is where there is a possibility for another move here. So if the institutional trader buying at this point in this market with a massive drop, they will look at here. Okay, but we don't have to, because we are retail trader. We can look for short-term move whenever it's coming, and it's completely good for us. But this is the institutional traders buy area potential, and they're gonna put the stop loss below here, and then waiting for the market to go back up. This is how they trade, and that's a big area to look at. Now at the moment, we can see that in this lower time frame, this is the 4-hour chart that you can see. Now it's trending now for us to sell here. Now the question is, how does then the market will move here if the institutional not? So this is the buy zone, but still there is a selling pressure here, right? Because without selling, the market will not move. There are many kinds of traders. You'll see the institutional trader also trade on very lower time frame. Okay, so depending on who is trading, what their trading strategy, what their trading style. Okay, now on the lower time frame, if we look at here, this is the 15-minute chart, and our zone here in this session we are looking at here, because we saw that this is currently in a downtrend, bouncing off that level could be an opportunity for us to look for sell in this market. So looking at here, if you look at here, you can see this is a zone, and this is what we applied in all our trade that you guys have seen in our previous session that we have opened. Okay, if you look at here, yesterday we had a few trades. One was from here, big win, and also there was trade in the past from here, also win. Now looking for that here, an entry to potentially go back to cross this high here. This is the current liquidity zone here. 5 minutes big ATR candle, if you look at. And with this 5 minutes big ATR candle, the market overextended below. Now if the price is crossing this high here, we'll be looking for potential sell, because this is the previous liquidity zone. Now the results is quite impressive, isn't it, with the strategy. This is some of the trade that we have secured. The strategy works that you guys have seen past week as well this week. Now trading like that is not hard, as I mentioned earlier. You can trade with risk management, and you can trade with a very high win rate, as long as you have the right tools and strategies. Now with this movement that you can see on gold, this is the 30 minutes price action. We have seen the drop. Now waiting for this pullback. We might see that the market to go ahead and cross this level. Now I'm going to prepare potentially pending order if we need to place, because we will be only opening when there is a high probability trade setup here in this market. So little higher in ITR here. Now looking at here, if you look at here, you can see this is a previous resistance line, and so if we look at the 1.58 here, so 61 pip, we can place, though we see there is the market is highly bearish, we might see that the price to straight drop here, but For us to enter any position here, we need to see the market has tested this key level. Are you guys ready for an entry? So we'll be placing here a sell limit on gold. At 3676.53. Stop loss at 1.58 here nearly, which will be nearly to 65 pip. 3682.88 and TP target here setting at 3660.88. That's the best level that we can look for this potential move here. But the market, if the market drop from this level, we will be looking for new zone to enter. But at the moment, this is where I'm looking at the market to go ahead, retest, and then reject back again to the major direction. But this pending order will be valid until this 4-hour candle close. So we will keep that pending order on to see how the market is reacting, if the market is going to retest that level. If it goes to retest this level, entering here will be a very good area of value for this potential break below again, and in that case we can catch this drop. Almost we can expect at least to 90 to 100 pip drop from that level straight below. Quality is more important than quantity. You guys have seen that the win rate that we have. Now we place the pending order here for a possible uptrend to the upside here to this key level of level where there is a high liquidity, and expecting the market to go ahead, retest, and then reject back again to the major direction of the trend. So lower time frame, we can see some narrower price action here. Our entry little higher. This is the zone that we can expect to win the trade once the market reach that level. And because our aim here is to win, right? Because when we are winning, the account is growing. That's all. Simplest way to do that, right? So we are placing the pending order in a very high area of value. Now, if the market breaks low here, which is possible to happen, we see there's a 1 hour candle close coming, or we could see the market to go back up even after this 1 hour close. Still we could see that the market to potentially bounce back here. I think we might see that potential movement to that liquidity zone, because the price moves from liquidity to liquidity. So as this is the previous zone, if you look at here, you can see from here there was a big move happen. The market could bounce off that level again to go to this another liquidity zone. Here is what you can see. The market is in fact showing that pattern in that area. So here is what we are looking at, that market, what we want to see the price to possibly to return again to that level. We see some kind of pullback in that area. And It's breaking that low here. So you see, this is the 5 minutes, almost nearly to 1.5 8-year to 2 8-year candle here. So this is the zone that I'm looking at for selling, and we still have, if you look at the 4-hour time frame, 2 hours to close that candle. And before closing of this candle, the chances for this market to possibly to go ahead and hit that level is higher. Okay, so got little disconnection, but we are back on track. And here is from this level, the market started to drop down to the direction of the trend. And if the price, before going here, coming back further below, the 4-hour candle that you can see here, if you guys look at it, the market now just came down below the 20 EMA. Price is just below the 20 EMA from the 4-hour time frame, which might lead that price potentially to have a reaction back to the upside here. Still, there is a high probability this market to drop a lot without that pullback. 30 minutes candle closing as a very narrow doji. If you closely look at it, we can see also another important pattern here. This is the previous trend line. Here the market has broken out of the trend line, and from the 30 minutes it just tested that, but which is not a very reliable information for us to sell this doji here. Though we could see that if this one is closing as a narrow doji, the market to straight back down, but it's gonna be low liquidity zone to sell this market. We need to look at this kind of high liquidity zone for selling, though it is little higher, but that's where the preparation is. That's why you see that all those trade has a big win rate, is because of trading from high liquidity zone is where you can find always a bigger edge in the market. It's all about having an edge in the market when you are trading. So we can see it's maintaining that downtrending market structure, which is literally breaking below to that support level. And from the 1 hour also you can see the market is showing that downtrend here, which is basically crossing that fair value gap. We might see the market to drop here to that level. From the daily as well, the market is showing that pattern. Now we will be trading FOMC coming up in few hours. So looking at today is Wednesday, but later in the NY session, which is in my zone, in Thursday, coming up FOMC, and we definitely need to pay attention here. So most likely 0.25%, but it's fully priced. Now that's gonna be pretty surprised if it goes to 0.5%, and that's where gold might have a spike, because if you look at the DXY so far this week, it was significantly bearish, but now we can see the market is having on DXY some retreat. Now if you look at the daily price action here, you can see from this daily support level, this is a daily support, where from this support level the market has made its bounce back to the upside here, and with this upside bias here on DXY, the market is approaching this support here, which is turning resistance. And from the 4-hour perspective here, that you can see the market is showing that uptrend, maintaining series of higher high and higher low, which is in an uptrend. Now this is basically locally showing that uptrend, but the global trend on DXY after multiple liquidity grab, which is showing that bearish here, if you guys look at. So this move that we can see is a pullback. So with the, if the surprising news coming with the FOMC, we might even see bigger spike, and that pullback could be a preparation for another drop, or it's started to reverse again from here. Now if the market DXY going up for enough pullback, and with the news again moving to the major direction of the trend, that's what we could see the mirror on gold, that we can see currently it's on a bearish trend on the locally. So that bearish drop that we can see on gold ultimately eventually could turn to be again a bull market, because there is a, if you look at here, it's a big fair value gap here, there is no red candle in that area. So the market still could straight drop well below here and then to bounce back up, or before the FOMC it might just slowly trend, and with the FOMC spike down to cross that low and revert back again. You know what I think, that if you guys look at, you can see just has broken the daily level, and it is now on a sharply in a downtrend. So the market may continue to drop until the FOMC, and then with the FOMC to revert again. With the rate cut confirmation, we could see the market to again bounce if the dollar gets weaker again. So depending on also the data coming up. What's your prediction on that? What is FVG? We discussed that one. Thanks a lot for answering my question along with the top down analysis. Welcome. Good day. Do you think head and shoulder has formed on the 15 minutes? Yes, there is a head and shoulder on the 15 minutes, and that's where you can see the market has shown that drop that we have seen that drop here on the price. So that head and shoulder, if you look at, has already been reflected in the market, because in this trending market we saw that head and shoulder, and the 4-hour candle closed here in that area with this head and shoulder. The market has started to drop again in the major direction of the trend. We can see that head and shoulder has been reflected in that area. And lower time frame sharply bearish. We see that with this pin bar, the market has broken back below to create a new lower low. Now again, looking at daily here, we can see that drop on the daily was pretty stronger here, and from the 4-hour that we can see the market has that trend continuing. This is the previous also support zone has broken. Now this candle could potentially go for a pullback. That's what waiting for the market to show up. From the 5 minutes chart, it created a new lower low, as today is very different than any other day. We could see that the market to trend, and I'm only be opening position from that level at the moment until this 4-hour candle closed. And once we see that the candle closed either before the close, we might see in the last hour the price to go back up to that key level. Patience is the most important part here. To be patient. You see that we do open 2 to 3 trades in a day, and the result of patience is very, very effective, right? Now this is our since yesterday we had this P&L, and it's the results of the patience that we had in the academy with all those trade. And now this week was in fact very important for us, because it's FOMC, and you want to see that there is in fact higher volatility. If the market is breaking this support here further below, I think it's potentially continue to drop here. And to find a trend in that move, I only can rely on the higher time frame resistance line. Here is the, if you look at this, is there is a previous resistance which is turning support here, and that's where you could see the market to possibly to trend back down here. Looking at the multi-time frame also help us to know the complete picture in the market. You see that I frequently change time frame, and this is the best way to I can map the market to see where the market is in relation to the higher time frame and the lower time frame. Always looking for the break of structure. As the market trend is bearish here, we almost came to this previous resistance turn support. Now it is maintaining that downtrend, so the bearish pressure is higher, and the level until this 4-hour candle close, there will be, this is the level that we will be looking for possible sell entry. And one of the most difficult thing that for a trader that I have seen in my long experience as a trader is to keep the mind focused, being rational in your trading decision. You see that more often when you look at the market, you'll see that waiting for an entry just to see that when whenever you have waiting and then the market is not going as your favor, deviating from the plan. Okay, when you can stick to the plan, stick to your trading plan, trading decision, and patiently wait for the trade come to you, that is where you become successful trader. And that's the main goal. Because our positioning right now, we placed the pending order well above. When the market was here, X was waiting for the market to go ahead and test that level for a sell entry from that zone. This is the smart money system, but we see the market, without taking us, started to drop back here. So we might need to readjust, but until this 4-hour candle close, we will be waiting for the price to potentially go ahead and test that level. Because with this 4-hour close, if we see the 4-hour close here, then we will get a new level to look at. At the moment, we are looking to see that only this is the zone that we are looking at. For this current session, we will be only looking to see that level to trade. FOMC coming, I will be again coming on live in our NY session. Also, we will be trading live FOMC. There will be a schedule for the FOMC, so make sure guys you join for all those schedule. Join the Telegram link where you can find all the updated education schedule for all those live sessions. These are not only live but also the actual way to trade the market. You'll see that this is where you'll learn the proper trading strategy with proper risk management and how to trade the market with high accuracy. So there will be another live just 30 minutes earlier than the FOMC begins, and then we will be ending with the press conference time. To see that time is pretty volatile and we want to take some of the trade during that time as soon as it arises. So I will see you again here. We will be coming on live NY session again. During the NY session, just a matter of three and a half an hour from this time, there will be definitely some good volume coming. I would like to see you there. This trade that we placed the pending order will be there. You can see the market at any point could bounce back to that. This is the nearest liquidity zone that I would like to enter. And if there is any update before the trade got expired, also we'll be posting in the Telegram channel guys for any update what we are doing with this trade, if we close the pending order, or if the trade triggers, then if we are taking the profit or any modification or management with that trade. That being said, I'll see you again very soon with another live traders. We'll see you there. Thank you. Until that, stay well, stay happy.